Exploring DeFi and NFTs, the intersection of decentralized finance and digital ownership. Welcome to CryptoQuest. The rise of blockchain technology has paved the way for two transformative innovations: decentralized finance DeFi and non-fungible tokens NFTs. These domains, though distinct in purpose, have become cornerstones of the blockchain revolution, reshaping the way we think about finance, ownership, and digital interaction. Decentralized finance DeFi, reinventing financial systems. What is DeFi? Decentralized finance, or DeFi, refers to a suite of financial services built on blockchain technology, primarily Ethereum. Unlike traditional finance, which relies on centralized institutions like banks, DeFi operates without intermediaries, leveraging smart contracts to provide services such as lending, borrowing, trading, and earning interest. Core features of DeFi. Permissionless access. Anyone with an internet connection and a crypto wallet can access DeFi platforms, eliminating barriers imposed by traditional financial systems. Transparency. All transactions are recorded on a public blockchain, ensuring complete transparency and auditability. Interoperability. DeFi protocols are designed to work together, creating an ecosystem where users can move assets seamlessly across platforms. Key DeFi applications. Lending and borrowing. Platforms like Aave and Compound allow users to lend their crypto assets and earn interest or borrow funds by using crypto as collateral. The process is automated, with no need for credit checks or lengthy approval processes. Decentralized exchanges DEX. Exchanges like Uniswap and PancakeSwap enable peer-to-peer trading of cryptocurrencies without the need for a centralized intermediary. Liquidity is provided by users, who earn fees in return. Yield farming and staking. DeFi offers innovative ways to earn passive income. Users can stake their tokens or participate in yield farming, where they provide liquidity to pools and earn rewards. Stablecoins. Cryptocurrencies like DAI and USDC are pegged to fiat currencies, offering stability in a volatile market. They are crucial for DeFi applications that require price stability. Innovations and challenges in DeFi. Innovations, cross-chain. Interoperability. Projects like Polkadot and Cosmos enable DeFi platforms to communicate across blockchains, enhancing functionality. Layer 2. Solutions. To address scalability issues, Layer 2 technologies like Arbitrum and Optimism are reducing transaction costs and improving speed. Challenges. Security risks. Smart contract vulnerabilities and exploits have resulted in significant financial losses. Regulatory uncertainty. Governments worldwide are still grappling with how to regulate DeFi, creating an uncertain environment for developers and investors. Non-fungible tokens NFTs, the future of digital ownership. What are NFTs? NFTs are unique digital assets stored on a blockchain, representing ownership of items such as art, music, videos, in-game assets, and even real-world items. Unlike cryptocurrencies like Bitcoin or Ethereum, NFTs are non-fungible, meaning each token is distinct and cannot be exchanged on a one-to-one basis. Core features of NFTs. Unique identity. Each NFT has a unique identifier and metadata, ensuring it is one of a kind or part of a limited edition. Indivisibility. NFTs are generally indivisible, meaning they cannot be divided into smaller units like cryptocurrencies. Provenance and ownership. Ownership history is recorded on the blockchain, providing indisputable proof of authenticity and origin. Applications of NFTs, digital art, and collectibles. Artists use platforms like OpenSea and Foundation to mint and sell their works directly to collectors, bypassing galleries and auction houses. Gaming and virtual worlds. NFTs power in-game economies, allowing players to own, trade, and monetize items or virtual real estate in games like Axie Infinity and platforms like Decentraland. Music and entertainment. Musicians can tokenize their albums or concert tickets, creating a direct connection with their fans. Artists like Kings of Leon have released albums as NFTs. Real-world applications. NFTs are being used for tokenizing real-world assets like real estate, rare collectibles, and intellectual property. Innovations and challenges in NFTs. Innovations. Fractional ownership. Projects like fractional.art allow NFTs to be divided into smaller parts, enabling collective ownership. Utility NFTs. Beyond being collectibles, NFTs now come with added utilities, such as granting access to exclusive communities or events. Challenges. Environmental concerns. NFTs on proof of work. POW blockchains like Ethereum pre-merge consumed significant energy, raising sustainability issues. Market volatility. The NFT market is highly speculative, with prices often driven by hype rather than intrinsic value. The convergence of DeFi and NFTs, shaping the future of digital finance and ownership. Liquidity pools for NFTs. The concept of liquidity pools for NFTs is revolutionizing the trading and valuation of digital assets. Traditionally, NFTs are unique, non-fungible, and illiquid, meaning they cannot be easily traded in bulk like cryptocurrencies. However, platforms like Uniswap v3 and SudoSwap are working to create liquidity pools for NFTs, allowing for easier buying and selling. These platforms aggregate NFTs into pools where users can trade fractionalized ownership of valuable assets. This concept of fractionalization within liquidity pools enhances the liquidity and market dynamics for NFTs, allowing users to participate in the NFT market with lower barriers to entry and enabling a more efficient way to price and trade NFTs. Tokenized assets in DeFi. NFTs are increasingly being used to represent real-world assets, such as real estate, fine art, and other high-value items, and are being integrated into the broader DeFi ecosystem. By tokenizing real-world assets, NFTs allow users to access DeFi platforms and financial services in ways that were previously reserved for traditional asset classes. For example, real estate tokenization allows fractional ownership of property through NFTs, enabling investors to buy shares of a property or real estate fund. Similarly, tokenized art pieces can be used as collateral in DeFi lending protocols. This integration is helping bridge the gap between physical assets and the digital economy, creating a more diverse and accessible financial ecosystem. Future trends in DeFi and NFTs. What's on the horizon? The continued evolution of DeFi and NFTs will reshape how we view finance and ownership. Both sectors are still in their infancy, but there are several key trends and innovations on the horizon that will significantly impact their future growth and adoption. Mainstream adoption. As both DeFi and NFTs gain popularity, there will be a greater push toward mainstream adoption. Current barriers such as user experience and accessibility are gradually being overcome with more user-friendly interfaces and better educational resources. Mobile apps, cross-platform compatibility, and integrated wallets are making DeFi and NFTs easier to use for the average consumer. Moreover, as traditional finance institutions like banks, hedge funds, and corporations continue to enter the space, the general public will become more familiar with decentralized platforms, driving both adoption and legitimacy. Cross-chain solutions. One of the most anticipated developments in both DeFi and NFTs is the rise of cross-chain interoperability. Currently, most DeFi platforms and NFT marketplaces are built on specific blockchains like Ethereum or Solana, but these ecosystems are often siloed. The emergence of cross-chain bridges and interoperability protocols will enable seamless transfer and use of assets across different blockchain networks. This will enhance liquidity, reduce fragmentation, and provide users with more options when interacting with DeFi platforms and NFTs. Regulatory evolution. As DeFi and NFTs continue to grow, regulation will play a crucial role in shaping their future. Governments and financial regulators are working on frameworks that will provide clarity around areas like taxation, anti-money laundering AML measures, and investor protection. Clearer regulatory guidelines will help institutional investors and developers navigate the space, bringing more capital and resources into the ecosystem. At the same time, regulators will need to balance innovation with consumer protection, ensuring that the decentralized ethos of DeFi and NFTs is not compromised. The development of self-regulatory bodies within the DeFi and NFT communities, along with clearer international guidelines, will also play a significant role in shaping the sector. Integration with the metaverse. The metaverse, a digital, decentralized virtual universe, will be a key area where DeFi and NFTs converge. As platforms like Decentraland and the Sandbox continue to grow, NFTs will play a central role in the creation and ownership of virtual assets, such as land, buildings, and digital goods. DeFi will provide the financial infrastructure for transactions within the metaverse, enabling users to buy, sell, and trade assets, access financial services, and participate in virtual economies. Moreover, the tokenization of real-world assets, such as art and property, will allow them to have a place in the metaverse, further blurring the lines between physical and digital ownership. Enjoyed the content? Don't forget to like, subscribe, and leave a comment below to share your thoughts. Your support keeps us going.